Now this example stays within the stock market during the same approximate time period as the last case study of Lyft stock, but this time it's Advanced Micro Devices, AMD stock chart. And right away there is some contrasting price action following a steep downtrend. There is a prolonged flat range that begins to move into a moderate to steep incline. Fully extending the trend lines backwards demonstrates the early origins of the uptrend prior to the channel's development. An incline formed during the major support here in the same general trajectory as the later upper boundary of the channel. It is definitely steeper than the previous channels seen with the Lyft chart example. They span the same approximate time range over several months. However, on their own they would seem to be more sustainable due to their more shallow inclines. But in this case, a steep channel is maintained for a prolonged time due to periodic volume spikes at swing points, which contain the price action in an aggressive uptrend. The upper and lower trend lines will be the most important for any channel, just like the upper and lower boundaries of a horizontal range. And like horizontal ranges that can have ranges drawn in the middle for further detail, channels can have trend lines and internal channels for further detail as well. It's not absolutely necessary in most cases, but it is useful to add further context, such as the addition of the trend line in the middle of the channel here. That does demonstrate contention within the channel, as there is often flat price action upon contact with it, in addition to some minor swing areas. And there is also flatter price action once the channel is broken, making it less reliable but still influential. For instance, trading re-enters the channel, and for short periods the market is back in the same approximate incline before experiencing heavier resistance to fall back out of the channel. This is especially noticeable closer to December. Even though there are more swing points, some of them quite sharp and significant, the overall uptrend is maintained with considerable influence remaining from the original channel's incline. Later, trading becomes even more flat and enters a clear horizontal range. However, there is still remaining influence from the channel's incline, especially apparent during the development of a strong bullish breakout. It's important to remember, even in a case like this, once trend lines and channels are breached, when the market begins trading above or below them, they begin to have diminished influence, and they are certainly less valid and less reliable, but they can still be used as a reference. Flat, horizontal, and support don't suffer the same drawback because they are fixed levels and ranges, whereas trend lines and channels are dynamic due to the element of price and time that affects their angles. Strictly horizontal price is only one dimension on the chart that does not change angle. Most market participants will more easily identify horizontal ranges compared to trend lines and channels that are more difficult to identify due to the variability of their angles, especially if volume isn't available on the chart. And lastly, this break, while it is exceedingly strong, still exhibits the characteristic of a minor pause prior to the surge higher.